So you don't have a lot of history to go by. But remember, in bear markets, we've seen an 80 to 85% decline. I don't necessarily think that will happen this time, but you have to, as an investor, be ready just in case. What I mean by that is last time we talked, we were right up here. We talked about a pullback, and sure enough, it just happens magically, huh?
Yeah, and we also talked about the 41 to 42K support. Okay, it went down to the 40K psychological, which is my favorite number. But yeah, we're there.
Yeah, we're there, and I did buy a little Bitcoin. So the key is here is what I ended up doing. So we were short right up here, which was the obvious level, the resistance point right up here. And then as we came down, I covered my short right in here, and I actually flipped it into a small long position right in this area, right, really just a hair below 40,000. I waited for that even number pierce, and then we're just basically holding. As long as we're holding support here, I think it's worthwhile to let it run, and maybe it'll get up to 42, 44,000 is a possibility here.
Yeah, I'm looking for it to pass that, man. I'm looking for it to pass that. I'll tell you this, if it doesn't in the next week or two, I'm going to start getting worried.
Gotcha. Yeah, I would happen to agree with you, because if it doesn't get really above, I would say 43, it's creating a bear flag, and that's what you got to be worried about for sure. I hope you're right for the bulls out there. I'm a little bit more pessimistic on the situation, even though I'm long. It's just a quick trade for me, maybe up to 42 to 44,000, and then I honestly eventually believe it's going to break down, unfortunately, just because of the chart pattern formation.
Yeah. Gareth, look at the 37.5 and 38K level. It gets pulled up quick.
Yeah.
It doesn't stay down there long enough to weaken it. Do you know what I
down
mean?
here, I mean, you're right about that. It pierced here, and then very quickly it ripped back up. So, I mean, that was a good sign. There were definitely buyers down there that swooped in heavily and bought up anything below 40,000. They bought up very, very quickly.
Yeah.
So nice pop today on the S&P. I mean, ripping higher, basically highs of the day. And what's interesting about the S&P here is that you're basically just chopping, right? So if you look here, down, down, up, down, pause, up, and you're basically forming this kind of sideways choppy action like this. My guess is there's further upside to go, but it looks to me like you're stuck in this wedge pattern, right? So if you connect these kind of lows here, you have support, and then your downside to here. And again, generally, you're looking for which way does it break? Does it break this way or this way? And then you get the bigger move in that direction. So again, a lot of chop right now, a lot of kind of uncertainty. We see interest rates going up. The 10-year is just continuing to climb up, getting close to 3%. That's not good for stocks, obviously. But the key yesterday was that a president, it was the Federal Reserve President Bullard came out and basically said that he thinks that the market has fully factored in the rates as high as they're going to go. So all of a sudden now the market's saying, oh, well, maybe we're only going to 3%, in which case we're already there. And then it's rally on right now. Now, I'm not a believer that the end of the road is here yet. I still think there's more downside in the markets, but certainly in the short term, that's a positive. It's important to recognize why rates are going up, right? So are rates going up because the economy is accelerating and then the Federal Reserve wants to slow it down just a little bit to keep inflation at bay? That's what we've seen for the last 20 plus years is what's been happening. Now you have a situation where the Fed is forced to raise rates very aggressively, not because the economy is ripping, but because inflation has just gotten way out of control. So it's a little bit of a near-term uncharted territory, which I think is going to be interesting to see how it plays out. I also wonder if the markets have gotten so addicted to that printing of money. So far it hasn't been that nasty of a sell-off from the all-time highs, but we have to see, does this continue? If the Fed really is taking liquidity out of the system, how does crypto fare? Crypto's never been in a market where we've seen interest rates rising dramatically or high inflation. Same thing for the stock market. It's been over 20 years, mainly because when things are bad, the Fed tends to print a ton of money, right?
Got you. Okay.
And when they print a ton of money, no one cares. I mean, the end of the world could be here. If we're flush in cash, no one seems to care. Let's take a look at gold here and see what we got going on. Gold's having a big down day today. I'm actually kind of, so I unloaded my swing trade on gold when we had this initial pop up, and I've been patiently waiting because I actually have a lower target where it should go to. But what I love about this chart on gold is look at how this trend line kind of marks the lows here, and this one marks the highs, except for this one pop. And the reason to explain this one pop, this was when the invasion started in Ukraine, when Russia invaded. So you kind of got this crazy panic buying on gold. It then very quickly reversed and it came back in this channel. So in the very least, it makes sense to assume gold should come back to this area right here. And then we'll see if it comes back a little bit. Ultimately, this is all near-term chatter that I'm talking about. Longer term, 3, 6, 9, 12 months, I think gold is going way, way higher. So again, I'm bullish. I think, again, we have a longer-term breakout. If we zoom out on the chart, this breakout occurred here. And then again, even if you pull back in this range, it's just a pullback before you shoot even higher. So the only thing you can make sense of, I think oil has to be, you have to keep in mind that oil trades off of a lot of geopolitical situations, right? So if the economy is starting, so also the economy. So if the economy is going to slow or perceived to slow, then oil demand will shrink and then prices would come down to meet that. And the same thing, if things get a little bit better in Russia, if things maybe calm down in that area, then oil would also decrease. So I'm not sure how coordinated those two things are, even though they're both commodities. I'm not sure how much the dollar has to do with it. Today, for instance, when I look at gold and the fall in gold, the number one thing that pops up is, number one, the chart told us that it kind of pierced this upper trend line, so it should fall. But then the other side of the coin is that if you look at the NASDAQ risk on assets, the NASDAQ's ripping today up 2.25%. And so usually what we see is that inverse relationship. When it's risk on, people sell gold because gold is a safety net, right? And I think that at least explains gold. Oil, it's a tricky one. You know, I'm in the camp that oil still has a lot further downside to go, personally. All right, here's your XRP chart. And so I think the big thing with XRP, right, is that we're all waiting on that judge's decision, the judge's ruling between the SEC versus Ripple.
Right.
And so, listen, I mean, number one, anytime you're involved in a trade or investment where potentially a big move will come one way or the other off of something like this, you have to be a little careful. Now, if you just look at the chart to me doesn't look amazingly good here. You can see this was your former channel. We broke below it. We then retraced. We broke below. We retraced here. And you're kind of consolidating below this level. You haven't broken any of these two trend lines that are above it. And so for me, that's just kind of a cautionary thing of saying, listen, if I don't have, and again, this is important, as an investor or trader, when you're making a decision to invest, I always like to feel like I have 80% success rate odds. When there's a judge's decision, and depending on if his coffee was right or her coffee was good in the morning, I just don't feel confident in that, you know. I just, you know, listen, it could go either way, but it's just one of those scenarios where the chart doesn't look amazing. So it's not telling me any insiders know anything that they're accumulating. Like that's one of the reasons why you pay attention to the chart, right? If the chart all of a sudden started to have a bull flag accumulation, then it's like, all right, does someone know something that the public doesn't know yet? But at this point, we're not seeing that on Ripple. So it's more of a no touch for me just because I don't have an edge. And if I don't have an edge, there's no sense in me investing. So the first thing I'm seeing, I mean, it's relatively new. So it looks like it just started last November, was it? Or so? So again, for a technical trader without a lot of price history, it makes it a little harder for me to analyze. The short term that I do see is that here you have this trend line kind of right down here. So it is holding above that. So as long as it holds above that, that's a positive. You're also, it looks to me like you're making a higher low. So yeah, I mean, it's as things go, it's actually not too shabby. What I mean by higher low is here, you can actually put this trend line in right here. Right. In fact, if I adjust this to this high, it's almost a perfect parallel line with the lower one. So yeah, I mean, overall, it doesn't look, I don't know much about this, to be honest. I don't know much of what's going on, but in general, it's not a horrendous chart. What I wouldn't want to see is this lower trend line break. Yeah. As long as that doesn't break, then yeah, it looks fine.
Now, can you compare it to Bitcoin?
Sure. Let's see here. So like maybe throw a Bitcoin's chart up. Let me see. I don't do this very often, but let's see. So it looks like in general, it trades pretty much similar. Looks like the highs and the lows. Like, so for instance, this run up right here coordinates with this move on Bitcoin. Right. And then you have this little uptick right here in Bitcoin, the move right here. So yeah, it looks like it trades pretty similarly to the price action in Bitcoin, which is good for now until it matures, right? Obviously, the idea is that it matures into something where it trades on its own. Yeah.
Exactly.
Apple's trading in this really interesting kind of sideways choppy range. You can see it just had this monster move from the low end to the high end and a 50% retrace to this dotted line. So you are getting a bounce here, but eventually the question to me is, where does it go? And really, wherever Apple goes, they say the market goes, because it's a $3 trillion company. It's a mammoth. So I do pay attention to Apple in terms of marking, the market and how it looks like it could be trading. Otherwise, I've been keeping an eye on some of these, like a Zoom. Zoom's had a good retrace. I mean, it's down from $500, $600. It has this nice little bullish pattern down here.
Nice
so even though I
yeah.
think the markets have downside ultimately, there are certain charts out there that are worth risk versus reward here. And again, this would be one of them for me. I do have a position with verified investing alerts with it, where we're kind of consolidating off of this move up. And if this can break out, it could have at least a move up, maybe as high as 135 to 140, which percentage-wise is a really big move. So stuff like that, I'm definitely keeping an eye on. I'm looking to reaccumulate some of the Chinese names as well. Here's Alibaba's chart. Again, monster downtrend. Had this monster move from this low up to this trend line. Now it's pulled a big retrace. I love these type of setups where you have these big moves and then it does a 50 or 60 or 618 Fibonacci retrace, and then maybe accumulate kind of around $90 for maybe another move up, potentially a breakout. So the great thing about it is charts are charts. There's always action, whether you're trading crypto, whether you're trading stocks, there's always something to do, whether it's going long or short. And again, I think it's important to learn to read those charts. If the US stock market start to really decline and we go into another powerful decline, then I do think you do see a move down to fill it. I'm hopeful this is a longer term bottom on the trade, which is why, if I start to accumulate, let's say at around 90 or 88, what I'll do is I'll buy maybe a quarter share size position, and then maybe another quarter here, maybe another quarter, basically dollar cost average in to get my average as close to that gap fill as possible. I like to always take a stab a little bit higher than a gap fill just in case it doesn't fully fill. So then you have exposure if it starts to run up, but I always leave myself room just in case it dips to that level to accumulate quite a bit more. Oh my gosh. In crypto, just remember the history of crypto. It's only been around for, 12 years or so, 13 years since 2009. So you don't have a lot of history to go by. But remember, in bear markets, we've seen an 80 to 85% decline. I don't necessarily think that will happen this time, but you have to, as an investor, be ready just in case. What I mean by that is be ready to dollar cost average. If you want to hold some now, just be ready and have that dry powder ready if that does happen. You don't want to put everything you got in at these levels in case it falls. So you want to be able to maneuver. Gold, I think gold is the answer in the near term. Bitcoin will far outperform gold in the future, but near term, the next couple of years, gold is going to be the place to be. I think it's an underinvested asset. And I think, again, it has already broken out. Look at the 1970s. I've talked with you, Paul, before about that, and it should be off to the races. And then was the last one stocks?
Stocks.
So stocks, I think this is a trader's market. The Fed, we said don't fight the Fed, or everyone said don't fight the Fed when they were adding money. So you were supposed to be long. Well, if they're pulling it out, you got to be very careful here in terms of not fighting the Fed. It should mean be more defensive, be safe, be ready to be in and be out, be more of a trader than a long-term investor in this environment, in my opinion.